Am I right? Is the worst behind for the shilling because it appears to have turned a corner?
We're yet to see, because what we've been seeing with MPC policy for the last, I'd say, 5 to 6 months is most of these measures they're putting in place are very short term. The fundamental problems are yet to be solved. So, for example, our balance of payments still remains quite high. So, basically, what we'll see if we do get another external shocks, let's say, such as the price of oil, which has stabilized at the moment, but if it were to rise, we'd feel the effect on our shilling immediately. If we were to get such factors such as bad weather, if the inflation levels were to come under pressure, almost all these factors would put pressure on our shilling, upward pressure on our shilling. So basically, all these measures are short term. We're yet to see the MPC come through with a long-term measure that will actually solve the fundamental problem.
Several clever people who look at the market telling Reuters the shilling still has further room to grow. Are you one of those people?
Yes, of course. As I keep saying, if the fundamental problems are solved, of course, we expect the shilling could strengthen further. We saw it, go down all the way to almost touch levels of about 81 shillings. So, yes, there's always room for the shilling, but at the moment, still remains under pressure, especially as we move into the next financial year. This will be a real test of the central bank's policies. So we'll see what way it goes. There's a lot of uncertainty in the market, especially when it comes to policy. If you look at during this month's monetary policy meeting, and a lot of analysts expected some move to be made either on the CBR or the CRR rate. This was not done, so it's left the market kind of in limbo. And we're seeing this uncertainty coming through to both the equity and the fixed income market.
What do you think on 30th June, in about a fortnight's time, the shilling will be? Will it be in 80 or 90?
I think it will still be in the 80s. Of course, some measures such as the longer tenor repos that the central bank has introduced and the persistent mop-up of cash from the market. This will support the shilling in the near term. So it's expected to still remain in the 80s. It may come under pressure as we move towards the end of the month, where we see the traditional end-month demand come in, especially from oil importers. But as long as the global oil price remains stable, this should not be such a worry for the shilling.
Let's talk government paper. There doesn't seem to be too much demand yesterday. The auction that the central bank had yesterday for the 91-day and the 182-day T-bills were performed spectacularly poorly.
Yes, it was expected. Of course, if I'm doing repos at close to 18%, which is where the CBR is, and I'm doing a 28-day repo at 18%, of course, as an investor, I wouldn't put my money into a 3-month T-bill to earn 9.3%. So basically, and also, as I mentioned earlier, there's a reaction from the market on the MPC decision, because what we had seen over the last 2 months, that is from probably the beginning of the second quarter, was the drastic drop in the prime rates. This was basically where the market was overpricing expected decisions from the MPC. They expected the CBR to be adjusted downwards, and this in line would see the prime rates also come that way. So what happened was the market priced this in too much, and when the CBR was not touched, what we're actually seeing now is a correction. So as a lot of investors are actually not quite sure what way the rates are going. And we've seen a bit of panic also in the secondary bonds market, for example, where demand has virtually dried up. We've seen rates begin to rise somewhat, probably like, for example, if you look at the infrastructure bond that was issued in 2011, probably a month ago it was trading close to 12%. Now it's gone back all the way up to 14%. That's almost 200 basis points. The same thing applies on the prime rates. We expect the 91-day, 182 and 364-day. We may continue to rise in the near term, probably about, let's say, 200 to 250 basis points. But once it reaches that support level, that resistance level where the market feels it should be priced, taking all of the fundamentals into consideration, I think it will stabilize and we should begin a gradual decline, because our long-term view still remains the same. We expect the rates over 6 to 9 months and inflation levels to come off.
When do you think this gradual decline will begin? Where does it set in?
I think if you look at most analysts' projections, as per June, we're expecting the 91-day T-bill, for example, to be at levels of between 13 and 14%. So that's what we're saying. We expect it to probably go up by about 2 to 300 basis points. So once we hit this level, I think the market we may face some resistance, and the market may actually stabilize.
In general terms, let's finish up with the Nairobi Securities Exchange, which I'm sure you also glance at more. But closing the week down, what were the highlights for you?
Basically, this week, I think most of the highlights were on counters, which are trading, CAM bonus, CAM divs, CAM rights. So we saw a lot of interest and activity on counters such as Diamond Trust, NIC, also ARM. There's a lot of local interest also on these counters. And the problem with some counters, just for example, Diamond Trust Bank, which had gone up to a high of about 105, is there's a lot of demand, no liquidity. Of course, we saw KQ numbers come out, 70% subscription for their rights. This was disappointing to the market, although I would say it was not unexpected. So we've seen a reaction in the price. Today, I mean, demand had virtually dried up. The morning started with demand at about 14 shillings and 50 cents, closed it with demand coming in at 14.10, and only minimal demand, probably about 10,000 shares. So we expect in the coming week, KQ will continue to lose, as a lot of investors were hoping to sell off at probably 15 and above, try to cut their losses and move into other positions. There's still a lot of interest in counters also, such as KCB. We're seeing a lot of foreign interest on that. Safaricom has basically traded range bound most of this week, about between 3 shillings 30 cents and about 3 shillings 40. So, but there's still a lot of foreign interest in that. A lot of interest remains on BAT, which is a good stock. I mean, a very high dividend yield. I mean, up to prices of about 360 shillings. The dividend yield still remains quite good at those levels, of about 10 to 9%.